Something quite significant is happening within the British tax system, and it's closer than most people realize. The government has just confirmed a major change through Revenue and Customs, and it begins on the 10th of November 2025. For millions of taxpayers, this is not just another technical adjustment buried in fine print. It could directly affect how your income is recorded, reported, and even how quickly you pay what you owe. Whether you're self-employed, a small business owner, or simply filing your annual return, this update is one you cannot afford to ignore. HMRC, His Majesty's Revenue and Customs, sits at the heart of how a country functions. Every payslip, pension, and business transaction is tied, in some way, to the systems managed by this department. Over recent years, the government has been pushing towards a fully digital tax environment under the Making Tax Digital initiative. The idea is simple in theory: reduce paperwork, increase accuracy, and allow people to view their tax information in real time. But now, with the latest confirmation from the Treasury, that concept is turning into firm legislation. The HMRC rule change confirmed this week introduces new digital reporting obligations for anyone earning income outside of standard pay employment. From the 10th of November 2025, every self-employed individual, landlord, or freelancer who earns above the £10,000 annual threshold will need to submit quarterly digital updates instead of the traditional once-a-year return. In plain English, that means 4 separate reports throughout the year, each detailing your income and expenses, followed by an end-of-year reconciliation. The government says this is about transparency and efficiency. Officials claim that millions of errors occur every year due to manual reporting, costing the Treasury over £9 billion in unpaid or misreported tax. By moving everyone to a digital system, they believe compliance will rise and mistakes will fall. But for the average taxpayer, the transition will require a new level of organization and possibly new costs. Under the updated framework, taxpayers will need to use HMRC-recognized software to record and transmit their financial data. The digital tools will automatically feed your income information into HMRC's online portal, ensuring that tax estimates are kept up to date throughout the year. Instead of waiting until January 2026 to discover your final tax bill, you'll see it evolve in real time as each quarter is submitted. That sounds efficient, but it also raises questions. What happens if your software crashes? What if you can't afford a subscription? HMRC has confirmed that free options will exist, though they may be limited in functionality. For businesses that already use accounting platforms, such as QuickBooks, Xero, or Free Agent, the transition will be smoother, but not cost-free. For freelancers, tradespeople, and small business owners, this change will have the most visible impact. Many people in the UK operate as sole traders and have managed their accounts through simple spreadsheets for years. That era is ending. From the 10th of November, paper records will no longer be considered compliant. Every invoice, every expense, every purchase must now be logged digitally, dated, and stored for at least 5 years. Accountants warn that this could increase administrative time by as much as 30%. Instead of gathering receipts once a year, individuals will need to maintain accurate records weekly or monthly. Late or inaccurate quarterly submissions could attract penalties, starting at £100 per missed update and rising for continued non-compliance. HMRC insists there will be a soft landing period, but experts believe enforcement will tighten quickly once the system stabilizes. Property income is another area facing reform. Landlords who receive rent from multiple properties will need to digitally report each property's earnings. Previously, a single end-of-year statement was enough. Now, every quarter, income and expenses for each property must be updated. The National Residential Landlords Association has expressed concern that smaller landlords, especially retirees relying on 1 or 2 rental properties, may find the process overwhelming. Many of them don't use accounting software or even have reliable broadband connections. The government, however, insists the new rules will simplify long-term financial planning and reduce disputes about underdeclared rent income. Let's talk penalties, because that's where most people get caught out. The new regime will introduce a points-based penalty system. Each missed submission earns you a penalty point. Once you reach 4 points, you'll face a fixed £200 fine. If you continue missing deadlines, the penalties increase progressively. For taxpayers with irregular income, for example, seasonal workers or creative professionals, this may prove particularly difficult. If you don't earn in one quarter but fail to report zero income, you still risk a penalty. That's a key detail many people might overlook in the early months. So why now? Ministers argue that the change aligns with a broader digital-first vision across the public sector. The Department for Work and Pensions, the DVLA, and the NHS have all shifted towards online platforms, and HMRC wants to follow suit. Officials also point to the growing number of side income earners, from delivery drivers to online sellers, who fall through the cracks of the traditional tax model. Chancellor Jeremy Hunt commented that modernizing HMRC is vital to building a fair and efficient tax system. He said the goal is not to penalize honest taxpayers, but to make it easier for everyone to stay compliant without complicated paperwork. Still, the rollout has been delayed twice already due to technical and cost concerns, suggesting the government knows the transition won't be smooth. Predictably, reactions have been mixed. Business groups like the Federation of Small Businesses acknowledge the benefits of digitization, but warn that implementation costs could outweigh short-term gains. Some small business owners fear they'll need to hire bookkeepers simply to keep up with quarterly submissions. Taxpayers on social media have voiced frustration that the change comes during a cost of living crisis. As one user put it, "We're already struggling with bills. Now they expect us to pay for software just to tell them how broke we are." Others argue that transparency is long overdue and that those already paying correctly have nothing to fear. From the accounting world, opinions are pragmatic. Many firms have been preparing their clients for this shift for years. They note that digital reporting will make it easier to detect fraud and unpaid taxes, which ultimately supports honest businesses. However, they caution that clients must act early. Waiting until November to set up software, verify data, and link accounts is a recipe for disaster. Several firms have started offering digital onboarding packages, one-time services to migrate your books from paper to software. Prices range between £150 and £500 depending on complexity. For many small businesses, that's an unavoidable investment. With every digital shift comes the issue of data security. Tax data is highly sensitive, and critics are already questioning how HMRC will handle the potential risk of cyber attacks. The department claims its systems are encrypted and comply with the highest standards, but it also encourages users to enable two-factor authentication and avoid public Wi-Fi when accessing tax accounts. There's also the question of reliability. If HMRC's portal goes down near a deadline, something that has happened before, will taxpayers still be penalized? The official guidance states that reasonable excuse provisions will apply, but taxpayers must provide evidence such as screenshots or support tickets to avoid fines. Not everyone is affected. People earning under £10,000 per year across all income sources remain exempt. Pensioners who rely solely on state pension, private pensions, or investment income that's already taxed at source do not need to report digitally. The change also doesn't affect pay employees whose tax is deducted automatically by their employers. However, if you have any side income, even from renting a spare room, selling items online regularly, or doing freelance work, you may fall into the new digital category. HMRC plans to send letters to those likely affected, but experts recommend checking early through your government gateway account. Preparation is everything. The best way to handle this change is to get comfortable with digital record keeping before it becomes compulsory. Set up a test account, try free software, and make sure you understand how to link your bank transactions. If you use spreadsheets, explore bridging software that converts your data into a format HMRC can accept. Some are free, others cost a few pounds a month. Don't wait until the deadline. Those who transition early will avoid the panic that's certain to hit next autumn. Accountants also suggest budgeting a small amount monthly for potential software fees, rather than treating it as a sudden expense. That way, when November arrives, you're not scrambling to make room in your cash flow. Beyond the technicalities, this change signals something larger about how the UK's financial system is evolving. The government wants near real-time data on how people earn and spend. This could eventually tie into benefits, pensions, and even credit reporting. In the long term, the goal is a fully integrated financial identity for every citizen. Critics worry that such transparency could lead to over-surveillance, while supporters believe it will reduce tax evasion and simplify access to services. Whichever side you're on, the shift is happening, and the 10th of November 2025 is the first step. Here's the bottom line. If you're self-employed, a landlord, or anyone earning additional income, act now. Register for Making Tax Digital, talk to your accountant, and ensure your records are current. Familiarize yourself with quarterly deadlines. They'll fall roughly in January, April, July, and October. Keep digital copies of receipts, invoices, and payments. Even photos stored in cloud folders count as valid evidence. Remember, the aim isn't to frighten taxpayers, but to make the process more accurate. Still, HMRC will expect compliance, and pleading ignorance won't be accepted once the system is live. That's the full picture of the HMRC rule change set to begin on the 10th of November 2025. It's a shift that could redefine how millions of Britons handle their taxes. If you found this breakdown useful, please like the video so more people across the UK can stay informed. And if you'd like regular updates on HMRC, pensions, or government policy changes, subscribe and turn on notifications, because the next few months will bring even more reforms you'll want to understand before they arrive.